decisions, ladies and gentlemen, what are you supposed to know? The most important thing you're supposed to know there is the target costing method. Target costing method is an important one. We have life cycle costing, We have the transfer pricing. Transfer pricing is very, very important. We have this concept of profit maximization, where they tell us that at profit maximum, marginal revenue equals marginal cost. 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 So among the other small methods, like what we call the markup, right? Method where you take, in this case here, the cost plus a markup to get your price, etc. So to get us started, ladies and gentlemen, I would want you to mention there target costing. Target costing. Target costing. So you're writing there target costing. The target costing, what you're supposed to know is basically the steps. Which steps do we follow for us to be able to come up with an appropriate target cost? So under target costing, step number one, and the target costing will be step number one will be identification of the targeted selling price. So you identify a targeted selling price. You identify a targeted selling price. So you go to the competitors, your competitors here to be. Your competitors to be, for example, if I want to start selling pens of this nature, what I will do, I will go to my competitors to be, that is in the future, get the average price. There will be others who will be selling this kind of a pen for 10 shillings, others 20 shillings, others 100. And now out of all those prices, I should be able to come up with an appropriate selling price for my business. I'll decide whether I would want what we call market penetration price, where I charge a very low price for me to be able to gain entry to the market, or if it's really a new thing that is very unique, I can decide to charge what we call a market skimming price. Market skimming price. Under the market skimming price, if you can recall, under the market skimming price, which is applicable to goods that have been innovated, which are very unique. Like now when they introduced these vehicles we call the Hammer, they used to sell them at a very high price. But now remember, when you set your price up there, what will happen is that you will attract so many competitors. So as they come on board and they start charging a high price like yourself, now what you need to do is to remove the cream. You remove the cream. This process of removing the cream is what we call the skimming. So you remove the high profit margins you had put for your unique product, so that when you lower your price, you will be able to throw those people away out of what you're competition. I've ever seen a question where they asked us to differentiate between a market price penetration and a market skimming price. So penetration price, this is the price that we charge in an environment of a high intense competition, where you would basically want to gain entry. At times you will be forced to charge a price that is even lower than your cost. You charge a price that is lower than your cost, simply to gain entry. After you gain entry and the people accept the kind of product quality you're offering, then they'll be willing to do what to take up a higher price from you. So they keep on adjusting the price upwards like that. How about the skimming? If you go to a hotel today and they say that you want skimmed milk. Skimmed milk is milk in this case here that hello? Yeah, sorry, allow me to, actually I'm the one who's supposed to do that, to mute their mics. But ordinarily, you're supposed to mute your mic once you enter a meeting, and then of course unmute it when you do what? When you want to talk. But for now, I've been able to mute all of you. So we have said when you go to a hotel and they say you want skimmed milk, skimmed milk is that milk that doesn't have a cream. So under skimming price, you charge a very high price. As other people, of course, envy you and join the market, what will you be doing? You'll be removing that cream. This good profit, you'll move it so that now you lower the price to send them away, Very good. So the first step of target costing is identification of the targeted selling price. That is very important. Number two, you'll come and identify and set. So you set the desired profit margin. So set the desired profit margin. You set the desired profit margin. Set the desired profit margin. And then number three, ladies and gentlemen, you will come and give us the targeted. So you determine the targeted cost. You determine the targeted cost. And how do you get this targeted cost? To get the targeted cost, ladies and gentlemen, what you're supposed to do is to take the selling price, you subtract the profit. You take the selling price. We are saying that for us to get the targeted cost, take the selling price you have up there, the selling price that you have up there, you subtract the profit margin. You subtract the profit margin. And then now, ladies and gentlemen, lastly, you'll come and give us what we call the cost gap. Give us the cost gap. You give us the cost gap. So those are basically the methods that or other steps that you need to go through for you to be able to get a targeted cost. Ladies and gentlemen, remember our targeted cost is the cost that we plan to incur to produce our products here. So if you're producing pens of this nature, it's a Japanese concept. If you're producing pens of this nature, you sit down simply before you start doing any production, and then you set your cost and say that this pen, there is no way it will cost me more than 8 shillings. And when, of course, we start our production, should we realize that our cost is going to be more than our actual cost is going to be more than our projected cost, then straight away we should be able to stop our production exercise. Now, for us to be able to understand this, ladies and gentlemen, I would want us to look at particular questions here. So I would want us to look at this particular ACCA question. I'll be relying on ACCA questions mostly to teach you this crash program, because I know how CASNEB behaves. Most of the times I'll be able even to prove to you, they take questions word by word from this ACCA, especially for AFM and AMA. And that is why during our normal classes, I sent you all these books. Great. So, ladies and gentlemen, I would want us to look at this particular question on target costing. I would want to know whether you are able to see my book. Are you able to see my screen? Are you able to see my screen, somebody? Yeah, thank you very much. Thank you very much. So we are told here, great games. I'm reading example 3.2 here. Great Games, a manufacturer of computer games, is in the process of introducing a new game to the market and has undertaken market research to find out about customers' views on the value of the product and also to obtain a comparison with competitors' products. The results of this research have been used to establish a target selling price. So you can see they have given you a target selling price of $60. This is the price that the company thinks it will have to sell the product at to achieve the required sales volume. Cost estimates have been prepared based on the proposed product specification, where you can see manufacturing cost, etc., etc. And then down there, they have given us the target profit margin for the game is 30% of the selling price. So required, they want us to calculate the target cost of the new game and the target cost gap So what I would want to do is to hide the solution a little bit. I hide the solution a little bit, and then request you to identify the targeted cost in whichever ways that you understood our methodology of getting the target cost gap. It's a simple thing. It's a very simple thing. It's a very simple thing. Take like a minute. Please try to identify that target cost. Let me see whether there's anybody who has been able to get an answer. My bright students, I know they normally move with speed. I'm so sure there must be somebody who has already gotten an answer. Let me see their comments. Let me see their comments. Or Teresa is asking which question. So I'm waiting to get an answer. I'm waiting to get an answer from any one of us. Teresa, this is the question we are doing. Example 3.2, target costing and target cost gap, where they have asked us here to calculate the target cost of the new game and the target cost gap. You simply follow the steps that we have laid down. We simply follow the steps that we have laid down. We simply follow the steps you have laid down. Is there anybody who wants Mwalimu to do this question very fast? Is there anybody who wants Mwalimu to do this question very fast? Is there anyone who wants Mwalimu to do the question very fast? Now, the first thing that I will do is to identify my projected targeted selling price. The targeted selling price here, they have told us, is 60. The targeted selling price is 60, ladies and gentlemen. From there, the second thing is to look for the desired profit margin. The desired profit margin is 30%. So 30% of what here? Of 60. 30% of the selling price, 30% of 60, this gives us what here? 18. Ladies and gentlemen, from there, I will come and determine the targeted cost. The targeted cost, how do I get the targeted cost? We've just said here that to get the targeted cost, we normally take the selling price minus the profit. The selling price minus the profit. So I'll take 60 minus 18. So 60 minus 18, this gives me 40 what here? This gives me 42. This gives me 42. Now, ladies and gentlemen, from there, I will come and ask myself, do I have any gap? Do I have any gap? My gap here will be the difference between the projected or rather actual cost vis-a-vis our targeted cost. So I would want to get my projected actual manufacturing cost, and this examiner really has given us the actual manufacturing cost. They are here. You can see they are here. They have given us cost estimates have been prepared based on the product specification. So what you're supposed to do for this manufacturing and non-manufacturing cost, you are supposed to add all of them. Could you kindly add all these costs of producing this product? Somebody add for me. Kindly add for me. Somebody add for me. Somebody add for me. Add for me. There is a person already who has an answer. Kindly add for me everything. And this book is an important book. Please, if you don't have it, it will be very important for you to reach out to us on WhatsApp. We send you the book. We send you the book, and I'll be able to show you the specific questions which you should be doing, which are sensitive in your exam. There are those questions, I know SCCA questions. If you happen to know them, you will easily pass this paper, easily, even without really having gone through the entire syllabus. They're quite sensitive areas. Like now, advanced MA, is it possible to get an exam over advanced MA where you do not have variances? No, variances have got to be there. Variances have to be there. So from the answers that I'm able to get from my chart here, most of them, Catelo, we have Josam, we have Okocha, they're giving me 45 point what here? So we have here 45.89. The gap will be 45.89 minus 42 like that, minus 42 like that, minus 42 like that. So ladies and gentlemen, how do we get the gap? To get the gap, to get the cost gap, you take the manufacturing cost, all of them, those costs associated with producing the product minus the targeted cost like that. And then of course, you'll be able to get the target or rather the cost gap. Cost gap is not a nice thing. Whenever you have a cost gap, it means automatically that your cost of producing the product are higher than the targeted cost. And as such, there are two ways about this. It is either you reduce that gap or you don't produce at all, because target costing gives us the ceiling in terms of costs that we can never go beyond, So what is our cost gap? What is our cost gap? What is our cost gap? This is quite easy. Is it 3.89? Thank you very much. Now, ladies and gentlemen, I will still come back to this target costing, but at times you will get an examiner asking you for 2 marks to give methods, to give ways of reducing the cost gap. Can somebody give me 2 ways that you can work with to reduce the cost gap, to make this cost gap 0 or negative? When it's negative, it means you're saving. Could you kindly give me the ways that we can use to reduce the cost gap? Those are not things that are in your notes anywhere, but they're things that you can think through and basically raise them up very first. Some of the ways that you could use to reduce your costs. I'm here on the chat room to see basically what you guys are telling me. Ladies and gentlemen, you basically look at the individual cost elements. Like there must be a cost element on materials. So what we will do is to talk about searching for alternative suppliers who will be able to give you perhaps discounts, better prices, right? Or even you can think of making use of alternative raw materials. Basically, it's about reducing material cost. The same case with the labor. consider alternative workforce. For example, if you intended to use employees, more of employees with degrees, you can say no, right? Put in this case here more employees, in this case here with a diploma, so long as they've got experience, they'll be able to deliver relatively better or rather relatively well. So it's all about looking at the cost components. Like, for example, you can decide to reduce our overhead cost by doing what? Reduce our overhead cost by ensuring that this new product, we do not need any extra room. We can mix this new product here with our old products here to reduce on the rent, etc., etc., etc. Great. Yeah, I can see students who have given me points here. Automation of production, yes, that will work. Bulk production, yes. Bulk production means that you'll be able even to buy things in bulk. The same workers are being, or rather, even if you're going to increase labor because of the bulk production, the benefit will be more. You will, for example, put in an extra labor of 20%, but production may increase, which in this case here compensates for that increase in labor. Thank you very much. Now, ladies and gentlemen, mentioned there, life cycle, the life cycle costing, life cycle costing. So under life cycle costing, what are we supposed to know? Under life cycle costing, ladies and gentlemen, what we are supposed to know basically are those life cycle stages, the life cycle stages of producing products here, the life cycle stages of production, the life cycle stages of what here? Of production. Remember that life cycle, just like a human being, just like how a human being moves in the entire life cycle. For the products, they also have the same. Of course, for a human being, there must be what we call research and development, and then of course there must be what we call the birth. So we have a birth, so a product will be born. After birth, what do we expect? Not unless there is a problem, after birth, we expect growth. After birth, we expect growth. Unakula Cerelac. So tunapata growth like that. Ladies and gentlemen, after that, what else do we have? We'll of course mature. We can't grow forever. So we have maturity, and then we'll come and talk of death. Not death, first of all, we have decline. We have decline, and then lastly, we have what we call the death, and what here? The death and withdrawal. The death and withdrawal from the market. Please draw this very fast. Death and withdrawal from the market. Death and withdrawal from what here? From the market. Death and withdrawal from the market. So anytime they talk about life cycle, always you have to recall this diagram, life cycle. Good products are born out of what? Innovation. Good products are born out of research and development. Research and development, and then at this particular juncture, we have birth of a product. After birth, we experience growth. Now grow haraka. You can't grow forever. Of course, even human beings, if we were to grow forever, ladies and gentlemen, then we'll become giants. So, ladies and gentlemen, after that, of course, maturity, there will be decline, mugongo in a bend, and then, of course, we expect death, and of course, withdrawal. So when we talk of life cycle costing, my brothers, my sisters, life cycle costing basically is a method of costing our products, which normally talks about what? Us capturing the entire costs of a product through its lifetime. So we do cost tracking, we do revenue tracking of a product over its entire lifetime. So whenever they talk of life cycle costing, remember cost tracking, revenue tracking of a product over its lifetime. It's lifetime or life cycle or life cycle or life cycle. Remember, you've got the traditional method of costing, which talks of what is the profit and loss account, which talks of a periodical, like we do a profit and loss account for 1 year. For life cycle costing, ladies and gentlemen, we are looking at the entire what? At the entire life. We are looking at the entire life like that. So I would want to see whether there is any student who will be able to tackle this question that has ever been tested in CASNEB, this question here. Yeah. I hope you are able to see this question for Solaris, this question here. Solaris specializes in the manufacture of solar panels. It is planning to introduce a new product. Sorry for that. It's planning to introduce a new slimline solar panel, specially designed for small houses. Development of the new panel is to begin shortly, and the Solaris is in the process of determining the price of the panel. It expects the new product to have the following costs. So we have the units manufactured and sold, we have research and development, marketing cost, production cost per unit, customer service cost per unit, disposal of specialist equipment. The marketing director believes that the customers will be prepared to pay $500 for a solar panel, but the financial director believes this will not cover all of the cost throughout the life cycle. Calculate the cost per unit, looking at the whole life cycle, and comment on the suggested price. That is your question. That is not my question. That's your question. It's you to do that question. Very easy. So you can see here they're telling us, Solaris specializes in whatever. Units manufactured and sold, year 1, 2,000 units, year 2, 15,000 units, year 3, 20,000, and year 4, 5,000. So it will be very important for you to underscore the quantity. The quantity sold is very important for me. Why? Because whenever I'm given a cost on a per unit basis, I must always take that cost per unit, and then I multiply it with the number of units to be produced. We multiply it with the number of units to be done what to be produced. Now, ladies and gentlemen, I can see research and development. Hii haina shida. Hiyo iko sawa kabisa. Tuko na marketing cost. Iko lump sum. Hawajasema marketing cost per unit. So hii nitaziadd tu vile ziko exactly. And then we have customers or other production cost, but per what? Per unit. So the production cost per unit, those ones you must multiply them with the number of units. Like now here you will take 500 times 2,000 plus 450 times 15,000 plus 400 times 20,000 plus 450 times 5,000. Because ideally, I would want to get the total production cost over the entire life cycle for all the years. For the entire life cycle. The same case here with customer service cost, I can see per unit. So it is per unit, I must always do that simple thing. How about the disposal? Disposal cost, they have not made mention of the word per unit anywhere. So I'll only take it the way it is, 300,000. So the marketing director, we are told, believes that the customers will be prepared to pay $500 for a solar panel, but the finance director believes that they will not cover all of the costs throughout the life throughout the life cycle. So they want us to calculate the cost per unit, looking at the whole life cycle and comment on the suggested price. What a great examiner. An examiner who is wishing us success. So ladies and gentlemen, I'll just come and write here the cost statement. I will come and write here the cost statement. the cost statement. So I will come and write here my cost statement, my cost statement, my cost statement, my cost statement, cost statement. So the cost statement, the first thing that I will have to pick very fast, my great friends here, the first thing that I will pick from my question is this: research and development costs. Research and development costs, they have not made any mention to do with per unit. So research and development cost, what I will do, I'll come and add 1.9 plus 100. I'm basically looking at the research and development cost incurred for the entire life cycle, which is 4 years. So 1.9 plus 100,000. Could you kindly give me that answer? So we have here research and development. I can see this amount 2 million Kenya shillings. 2 million Kenya shillings. I hope you're able to see where I've gotten the 2 million from. How about marketing cost? The same. Marketing cost, what I'm supposed to do is to come and add all marketing cost here for all the years. 100,000, 75,000, 50,000 plus 10,000. Can a good student give me the total lump sum figure of marketing cost? Marketing cost, the lump sum figure of marketing cost. Could you kindly give me an answer? Please talk to me. Remember, under the crash program, I'm supposed to move with a relatively high speed, but of course, we still have to be at a position of understanding. Yes. So what do we have here? From Aurelia, 235,000. 235,000. But can someone confirm that figure? Can someone else confirm that figure? Can someone else confirm this figure? Can someone else confirm this figure? For the marketing cost. Marketing cost. So for the marketing cost, I'm being told it's 235,000. 235,000. The next one is the production cost. The next one is the production cost. Yeah, they've been able to confirm the figure very fast. Thank you very much. The next one is the production cost. So for production cost, do we have? For production cost, I can see a bad thing. The bad thing, ladies and gentlemen, here is production cost per what here? Per unit. So whenever they say any cost per unit, there is no cause for worrying. No reason to worry at all. Just take the cost per unit times number of units. Like now for production cost, year one, I'll talk of 500. 500 times 2,000 plus the production cost of year two, 450 times 15,000 plus 400 times 20,000 plus 450 times 5,000. Could you kindly give me an answer? Kindly give me an answer. Kindly give me an answer. Kindly give me an answer. Aurelia gives me a figure of 18 million. 18 million. 18 million. Is that figure correct? The total production cost for the 4 years. For the 4 years. Please, I would want to get answers from everyone. This is an intense class. Intense class, intense class, intense class. I want to get answers. 18 million. Another student has been able to confirm. 18 million. 18 million, 18 million, 18 million. That is what here? That is production. That is production cost. 18 million production cost. Ladies and gentlemen, after that, I would want us to go to the next one, which is customer services cost. And I can see they have given me that language of per unit. But as I told you, I will not worry at all, because I'll end up getting everything. So could you kindly give me this answer? The customer service cost per unit, customer service cost per unit, customer service cost per unit. You multiply with the number of units which are given up there. I hope everybody is able to follow, and if you're not able to follow, it's my work to ensure that you understand what you only need to do is to go to the chat room, chat box there, you chat with us, or even talk to us. You can tell Mwalimu on the chat box, please Mwalimu, allow me to unmute myself so that I can ask a question, or just put up your hand. There's an icon there for putting up a hand. So customer service cost, I can see an answer. I can see an answer here. 1.7 million. Aurelia seems to be getting this very fast. So 1.7 million. So this is the customer. This is the customer service, whatever cost. And then the last one, as per the life cycle, is the disposal. The disposal. Disposal cost. For the disposal cost, which is given there, what do you think? Are we going to multiply that disposal cost with a quantity? What do you think of that disposal cost? Are we going to multiply it with the quantity produced, the disposal cost? Thank you very much, Aurelia. Pick it as it is. As it is. Simply because disposal cost has not been mentioned, ladies and gentlemen, to be on a per unit basis. If you multiply it, it is the disposal cost or an income. Very good. Very good question here. Very good question here. He's asking whether disposal cost is an income or a cost. Ladies and gentlemen, remember the life cycle costing. Life cycle costing starts from research and development, and then down there it ends with what here? Withdrawal and the disposal. On death, on death, on death, on death, I want to believe, ladies and gentlemen, on death, even for a human being, we can only incur a cost. Yeah, like the coffin or whatever. For product development, all these big companies like breweries, at the end of the day, whenever their products here hit that decline, whenever their products here normally die, they have to engage in disposal, where they will have, for example, if its bottles get a very expensive way of melting them. So it's a cost purely. It's a cost purely. Don't confuse this with disposal with selling. And the life cycle disposal is incurring a cost to bury. Incurring a cost to bury. So the disposal cost, ladies and gentlemen, here happens to be what here? The disposal cost happens to be 300,000. So then, ladies and gentlemen, could you kindly add for us total cost? Add for us the total cost. Add for us the total cost. Tell us the figure. Tell us the figure. Tell us the figure. Give us our total cost of producing this product over the entire life cycle. Life cycle. Life cycle. 22.235. 22.235 million. Please double underline. Thank you very much, Daniel. 22.235. Thank you very much. Now, ladies and gentlemen, you have to be quite keen. What this examiner wants you to do is to ascertain the cost per unit, meaning that you must go over the years and add for us the total output, the total production quantity for the 4 years. You add for us. Go back to the question. Go back to the question. This question is here. Could you kindly add for us units manufactured and sold? Year 1, 2,000. Year 2, 15,000. Year 3, 20,000. Year 4, 5,000. Kindly give us the answer. Give us the total quantity. Give us the total quantity. Total quantity. The total quantity. The total quantity, if you add up, what total quantity are we going to get for the 4 years? I can see 2,000, 15,000, 20,000, 5,000. Thank you very much. I can see students who have responded here very first. They're giving me 42,000. 42,000. And therefore, the cost per unit According to Aurelia, the cost per unit is 529. The same case with Okocha, 529.40. What they have done to get cost per unit, they've taken this total cost divided by the number of units. So they're getting here 529.40. 529.40 is the correct cost per unit, and therefore the marketing director was very wrong. Remember, you are required to make a comment. The marketing director was very wrong because the marketing director is proposing that we accept a selling price of 500. This selling price of 500 will not be able to meet the cost per unit. Will make losses. So the person who is correct here is a finance director who believes that that 500 can't cover all the cost throughout the life cycle, Now, ladies and gentlemen, I hope that is clear. I hope that is clear. Any question? Any question? So if there is no question, I would want us to look at your revision kits. Still ACCA. I told you I'll be able to guide you through how you're going to pass this exam and even guarantee you passing, especially if you follow our training. If you follow the trainings here fully, do exactly what I'm telling you to do, I'll be able to guarantee you a pass. Now, ladies and gentlemen, if you have your revision kit of these, I would want you to go to question number 10. Question number 10. Those students that have not sent this kit, I will be able to do that in a moment. Only that I can't multitask. You know, men, we have a problem. It's very hard to do two things at a time. I know ladies are able to do that very swiftly. So question number 10, for the ones who have this, I would want them to go to question number 10. Yes, question number 10 is there. Question number 10 is there, target costing. Question number 10 is here. Question number 10. Page number. For ACC, you simply scroll through. You'll be able to get question number 10 very easily. But page number 17. Page number 17. And if possible, you should print this book. You simply print it. We shall be relying on this book. I'll be able to show you very many questions that have been tested there from this. And of course, in this case, you put in CASNEB AMA, many of them. So like now I'm targeting this one as my theoretical question. Yes, theoretical question. So I would want somebody to go through it and try answering it. Quite an easy one. I would want to see whether there is anybody who is able to get this very easily, as I get a way of sending students who don't have this. And I want to imagine that all of us are in the same So they want you to explain the main steps involved, in target costing, the main steps involved in target costing. You'll get various books, in this case here, giving very many steps, but the most important steps that you should never forget are the ones that I gave you, where I told you, number one, ladies and gentlemen, always remember to search for an appropriate targeted selling price. Get to the board or get a policy on their targeted margin, profit margin. Number three, give us what we call a cost, or rather a targeted cost. How do we get this targeted cost? It is targeted selling price minus the targeted profit margin. And then, of course, lastly, there is what we call the cost gap. There is what we call the cost gap. Very important. Now, ladies and gentlemen, look at part B. Explain 4 key characteristics that distinguishes services from manufacturing. Services from manufacturing. Services from manufacturing. There is one that I will never ever, or rather 2 of them, that I can't forget at all. You know, services, if you're buying a service, services are basically what here, the concept of intangibility. It's not like when you buy a motor vehicle, you'll be able to say, this motor vehicle is mine, I can touch it. No. This is a service you're offering. Like now here, ladies and gentlemen, I'm offering a service to you. I'm not giving you anything you can go home with, which is tangible, which you can touch. So intangibility. Then we have the concept of what here, we don't transfer ownership. If, for example, you go to a hotel today, you can only, ladies and gentlemen, enjoy, you have the right of using that particular room, for the number of days that you have been booked into that room, but you will not be able to carry that room home with you. So the concept of what here, lack of ownership. And these answers are really given. If you go to, there's a section for answers. Yeah, there's a section for answers. That is 32. I'm looking for 10. Yep. Answers are given here. So like now this is page number 130. Page number 130, especially on the key characteristics of services. Intangibility. Intangibility refers to the lack of substance which is involved with service delivery. Unlike goods, physical products such as confectionery, there is no substantial material or physical aspects to a service, no taste, feel, visible presence, and so on. For example, if you go to the theater, God forbid doesn't happen, you cannot take the play with you, or theater, okay, theater, the normal theater, for movies, yeah, that's okay. Inseparability, simultaneity, it happens there and then. You'll be consuming this service automatically. You consume it as it is coming. Like now here, when I'm teaching you, you're told here, many services are created at the same time as they are consumed. So they are created at the same time as they are consumed. Think of dental treatment. No service exists until it is actually being experienced, consumed by the person who has bought it. So it is separability, simultaneity. Then we have heterogeneity. Like, for example, when you go to a place like Sarova Stanley, if you're taking a cup of tea over there, those guys over years, they have standardized their taste of tea. You'll always get the same taste. If you go to Serena Hotel and ask, for example, for a particular food, if they tell you it is 30 minutes, it will be exactly 30 minutes. They have standardized their processes. So whenever it comes, ladies and gentlemen, to these physical products here, you can standardize. But for a service, if, for example, I taught you this topic in the normal class and did a particular question in 10 minutes, when it comes to crash program, I may not be able to take exactly 10 minutes. It may take more. So you're told, ladies and gentlemen, heterogeneity, heterogeneity is the opposite of what here, homogeneity. Many services face the problem of maintaining consistency in the standard of output. It may be hard to attain precise standardization of the service offered, but customers expect it, such as with fast food. So many services are non-standard, which makes it difficult to establish a standard target cost. Perishability, services are innately perishable. The service of a beautician are purchased for a period of time. Even mwalimu, of course, today's contract will be ending at exactly 10. So it's a perishable. I can't stay with you here forever. No transfer of ownership. Services do not result in the transfer of property. The purchase of a service only confers on the customer access to a right to use a facility, So, ladies and gentlemen, I hope that is okay. So I would want you to go to your past papers later on and do a question on this concept of what here? On this concept of target costing, and life cycle costing. Life cycle costing. They are very important for you, especially for these exams that you are expecting. Very important. So is there anybody who has a question? Those questions, I'll be able to give them to you on WhatsApp. I told you I'm going to provide you with a guided way of revising. So on WhatsApp, immediately after this, I'll be able to tell you the questions that you shall be doing. Great. But just before I disappear from this particular area, there are things I would want to see whether my students have been able to master. Great. Now, look at this particular question. Yes, question number 54. Question number 54, just before I run away from this learning cycle, life cycle costing, could you kindly try question number 54, A and B? Great. Question number 54. I'm giving you exactly 7 minutes. 7 minutes. Please give me the answer to question number 54. If I could try the question myself, allow me to try it. If I try the question, oh, you are not able to see my question. Are you able to see my question here, question 54? Is there anybody who is able to see my question? Yes or no? I've shared my screen. I've shared my screen. Are you able to see my screen? Question 54. They're not responding. Is there anybody who is able to see? Yes, great. Great. So there were students who are not able to see my screen. Perhaps you have a problem with your internet. Perhaps you have a problem with your internet. Thank you. Now, so here the catchword is just one. They have told us here the selling price of the steel will be constant at $30 per game. Analysis of the cost show that at a volume of 10,000 units, total cost will be $130. Please underline, underscore the word total cost, right? 130,000. However, at a volume of 14,000 units, total cost of 150,000 is expected. So what this person has done, he has given me two activity levels. So whenever he gives me two activity levels, what does he expect me to do? To use a high-low method to decompose the total cost into variable stroke what here? Fixed cost. I'm repeating again. whenever you see the examiner telling you at this particular quantity, total cost is this much. Another quantity total, so it's giving you two points, which will be able to enable you come up with a straight line cost function that has got fixed versus what here? Variable components. Very easy, very easy. So this is what I will do. They have told me. This is what I will do. They have told me this. They have told me this. What they have told me, ladies and gentlemen, is that when x equals, so we have here x vis-a-vis tc or y. So for x, what have they told me? That at a volume of 10,000, at a volume of 10,000, the total cost will be 130,000. And then when volume, ladies and gentlemen, when volume goes up to 14,000 units, we have our total cost being 150,000. Great. So then once I have these two parameters, what am I supposed to do very fast? These are 2 points. I should be able to use them to get the gradient. I should be able to use these to get the gradient. So how do I get the gradient? Gradient, which is my B, which will be automatically my variable cost, which will be automatically my variable cost, which will be automatically my variable cost per unit, variable cost per unit will be equal to change in cost all over change in x. Change in cost all over change in x. Change in cost all over change in x. So change in cost, I would want someone to come and subtract. We are talking of 150,000 minus 130,000. All over change in quantity. The quantity is 14,000 minus 10,000. So 14,000 minus 10,000. Then at the end of the day, what are we going to get? At the end of the day, what shall we get? 150,000 minus 130,000 is 20,000. 20,000 divided by 4,000. 20,000 divided by 4,000, that will give me a variable cost of what here, somebody? Remember, B is the gradient. The gradient. If you remember our straight lines concept, B is the gradient. So once I have the gradient, I'll be able to talk about variable cost per unit. Please give me an answer. I can see answers here. 5. Thank you very much. So 5. So once I get variable cost per unit as 5, the next thing will be for me to get the fixed cost now here, which is A. Remember, our straight line equation is y equals A plus bx. A plus bx. So you pick any of the 2 points. Any could be this or this, any. So for this first one, I can see my y here is 130,000, which will be equal to A. A that I don't have. A is what I want, the fixed cost, which will be equal to A, plus B that you have just obtained here, which is 5 times X for the first point, which happens to be what here? Which happens to be 10,000. So could you kindly then give us A? Kindly give us A. A will be equal to what? So kindly give us A. A will be, so this 50,000, when it crosses over 50,000, it becomes negative. So it will be 130,000 minus 50,000. And I can see a good student here called Mumo giving me 80,000. So A is my fixed cost. A is my fixed cost, which equals 80,000, which equals 80,000. So ladies and gentlemen, the moment I have that, now I should be able to get All the answers correct. All the answers correct. All the answers correct. So let's get now back to our business. We get back to our business. Let's get back to our business. So our business, I want us to read this. So you see they have given us the budgeted volumes are as follows. In addition, we have marketing costs for stealth will be 60,000 in year 1 and 40,000 in year 2. Design and development costs are all in a card before the game is launched and has cost 300,000 for stealth. These costs are written off to the income statement as in a card, i.e. before year 1 above. So they want us to produce the budgeted result for the game stealth and briefly assess the expected performance, taking into account the whole life cycle of the game. Now, ladies and gentlemen, I'm so sure I've been able to get you out of your troubling zone. I want to believe now each one of us should be able to come up with a life cycle costing statement, but this time around you have to do it for year 1, year 2, year 3, and then total life cycle column there, right? So we have, ladies and gentlemen, now let me just first of all remain quiet for 2 minutes, and then I see how you'll be able to play the ball. You should be able to play the ball nicely. So here we are, ladies and gentlemen. So I'll come and give them income statement, life cycle, income statement, life cycle, income statement, life cycle. So we start with sales revenue. So we start with sales revenue. We have year 0, 1, 2, 3. Year 0, 1, 2, 3. Year 0, 1, 2, 3. Right? So for sales revenue, of course, year 0, at time 0, we haven't started selling. So revenue there will be 0. Then we go to year 1. Year 1, I can see quantity. Of course, it's not lost on me that there is a price given. There is a price given. There is a price given. Selling price given here in paragraph 2. In paragraph number 3, I mean. The selling price is 30 per game. And then you can see sales volumes. Like year 1, we have 8,000 units. So what is 8,000 times 30, Bob? Somebody give me an answer. 8,000 times for year 1. Remember, to get revenue, we normally take price times quantity. Price times quantity. So I'm waiting for an answer. I'm waiting for an answer. Please move with speed. Please move with speed. I want to get revenues because this time round, as per the question, they want us to do an assessment in terms of profitability. So in terms of profitability, it means I have to begin from revenues. I have to begin from revenues. So we want to get the answers. For year 1, I can see the game goes for 30 bob. I can see an answer here, and the quantity is 8,000. So Aurelia tells me that year 1 is 320. Year 1, 320. Are you sure, Aurelia? What have you done? 30 times 80,000. Aurelia, just check again. Should be 240,000 for year 1. 240,000. So for year 1, we have 240,000. Year 2, the price we've been told is constant. Year 2, Aurelia, you're right. It should be 480,000. How about year 3? Year 3, the last year, we are talking of 120,000. 120,000. So please give me the total, what basically we call the life cycle. What basically we call the life cycle figure. Give me the total over the life cycle. What figure are we talking about there? Please add for us. Over the life cycle, what do we have there? Over the life cycle, what do we have there? You add. So we have 0 plus that one, plus that one, plus that one. Give me a figure. What figure do we have here for the life cycle? $840,000. 840,000. I would want to give you a secret. If you want these Zoom classes here to be very nice to you, always ensure that you actively work on the figures and post them here. Never ever come to Zoom classes. Attending Zoom classes passively is very dangerous. You must always try to engage yourself so intensely so that even if there are people in the house, they should be able to see that this man, this lady is so serious with her class or his class. Yeah, give a figure, type there, ask questions like that. Otherwise, you are cut for physical classes. You are cut for physical classes. Great. So that is sales revenue. Now, after that, ladies and gentlemen, I would want us to go to the next thing, which is the cost. Cost, where we shall start with variable cost. Remember variable cost, already we calculated variable cost and got a figure of 5 per unit. So ours will be to take the number of units multiplied by what year? By 5. Take the number of units multiplied by 5 times 0, of course, units are 0. Time 1 units are what year? 80,000. 80,000. So 80,000 units, 80,000 units, 80,000 units times who? Times 5. That will give us what figure? 80,000 units times 5. Please give me an answer. 80,000 units times 5. I'm waiting very fast. Because if you recall, we got B. B was the variable cost per unit. So what you're doing is to take the variable cost per unit times number of units, times number of units, times number of units. Please give us an answer. I see someone who has just given me an answer here. 40,000. Thank you very much, Daniel. 40,000. 40,000. So 40,000 for year one. How about year two? Kindly give me the figure for year two. The variable cost 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 for year two. You'll still take that, work with that 5. You will work with that 5. Yeah, Okocha gives me a figure of 80,000. The same figure has been given to us by Dennis and Daniel, 80,000. How about year 3? Year 3 again, you take 5 times from PHY, 20,000. And to believe that's Phyllis, 20,000. How about in the life cycle variable cost? Life cycle variable cost, life cycle variable cost, you add the 3. You add the 3. You add the 3. Life cycle variable cost, you add the 3. You give us a figure. Lucy gives us a figure of 140,000. Thank you, and thank you very much. From there, ladies and gentlemen, I would want you to come and fix the fixed cost. Fixed cost, fixed cost. So for fixed cost, could you kindly give me the answer for fixed cost? Give me like fixed cost for year 1, fixed cost for year 2, fixed cost for year 3. What answers do we have there? Fixed cost. Fixed cost. Remember, we had used high-low method to ascertain the fixed cost. So Teresa gives me 80,000, 80,000, 80,000, 80,000 for year 1. How about year 2? How about year 2? I've given you a secret. Just get involved. When you get involved in these Zoom classes, they are much better than the physical classes. But if you're not getting involved, I kindly make a special request to you, go back to physical classes. It will be better because in physical classes, you have a neighbor. Here, your neighbor is your calculator, your pen, right? And myself. So the class becomes only good if you dive very deep into the classroom. Yeah. Aurelia says 80,000 all the years because according to Aurelia, fixed costs are supposed to be constant throughout, which is a very great idea. What about other students? Teresa says no. Tells Aurelia no. Year 2 is supposed to be 120,000. What Teresa has done, Teresa has read something very serious here. There is something that Teresa has read here. Teresa has read this thing, which says that however, at a volume of 14,000, total cost is 150,000, which is expected. If volumes exceed 15,000 units, the fixed cost will have to increase by 50%. And you can see it's only year 2 whose volume is more than 15,000. So therefore, year 2's fixed cost will be your figure of 80,000 times 1 point what? Times 1.5. 80,000 times 1.5. That is how Teresa was able to get 120,000. Naomba tupigie Teresa makofi tafadhali. Mimi naomba tafadhali tupigie Teresa makofi tafadhali. Hiyo Teresa amefikiria sana. Hapo Teresa kusema ukweli amefikiria sana. Hiyo si kawaida. Hapo Teresa amefikiria zaidi. Teresa amefikiria zaidi kabisa. Asante sana. Sawa. So for the next year, of course, the next year the units are below. They are below 15,000. The next year the units are below 15,000. You can see there are only 4,000 units. So what we need to do is to recognize 80,000 like that. Is to recognize 80,000, and then you give me the life cycle cost. LC stands for life cycle. You give me the life cycle cost. 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 So what do we have here for life cycle cost? Life cycle cost. Life cycle cost. I'm being given a figure of 280. 280. Thank you very much, Okocha. Thank you very much, Evans and Lucy. They're giving me 280,000. Do we have any other cost other than this variable and fixed manufacturing cost? Do we have any other cost? Do we have any other cost? Yes, we have the marketing cost. Marketing cost, you can see marketing cost. So you can see marketing cost of how much? Marketing cost of 60,000 in year one, 40,000 in year two. So year one, 60,000. Year two, what do we have there? Year two, 40,000. The other years, there is nothing to market there. So 60,000 plus 40,000, that one gives me 100,000. You go to the next one. Other than this marketing cost, what else do we have? Design and development costs. Design and development cost. Design and development cost. They're telling us 300,000 for steel. These costs are written off to the income statement as any card before year one above. So we have here before year one above, we have 300,000. Nothing really here, nothing there, nothing there. So 300,000 here. So all these are expenses which we need to capture in brackets. Other than revenue, we capture them in brackets. We capture them in brackets nicely, like that. And then you'll be able to give us, ladies and gentlemen, our profits. Our profits stroke our losses, like that. Profits stroke losses. Profits stroke losses, like that. Thank you very much, Josam. You were able to see that figure. So please give me the profits stroke losses very fast. Yeah, so nangana kabisa, profit stroke losses. Okay, So they have already given me the answers. They've given me the answers. At the end of the day, in the life cycle profit, they are telling me that the profit here should be 20,000, like that. We should agree in both ways. You subtract those ones, or if you add these ones, at the end of the day, we should be able to get what they are, 20,000 profit. The life cycle profit is 20,000. So, ladies and gentlemen, I want us to try now the last one. There's a theory question there which I would want you to look at it later, but I would want us to go back to our target costing. We try this question number 66. Big cheese chairs. ACC is a great examination body. Look at even how they choose their names of their questions. Big cheese chairs. BCC. Manufacturers and the sales executive leather chairs. They are considering a new design of massaging chair to launch into the competitive market in which they operate, massaging a chair. They have carried out an investigation in the market and using a target costing system have targeted a competitive selling price of $120 for the chair. So really they have a targeted selling price. Beautiful. BCC wants a margin on selling price of 20%, ignoring any overheads. The frame and massage mechanisms will be bought in for $51 per chair, and the BCC will upholster it in leather and assemble it ready for dispatch. Leather costs $10 per meter, and 2 meters are needed for a complete chair, although 20% of all leather is wasted in the upholstery process. The upholstery and assembly process will be subject to a learning effect as the workers get used to the new design. I like ACCA. You can see they're trying to combine target costing with learning curves. The upholstery and assembly process will be subject to a learning effect as the workers get used to the new design. BCC estimates that the first chair will take 2 hours to prepare, but this will be subject to a learning rate of 95%. The learning improvement will stop once 128 chairs have been made, and the time for the 128th chair will be the time for all the subsequent chairs. The cost of labor is $15 per hour. The learning curve formula is shown on the sheet. You know, ACCA, they don't want you to cram formulas. They always give you the formulas, but CPA, you have to cram the formulas. So the learning formula is shown on the formula sheet, and at the 95% learning rate, the value they will even give you. So they want us to calculate the average cost for the first 128 chairs made and identify any cost gap that may be present at that stage. B, assuming that a cost gap for the chair exists, suggest 4 ways in which it could be closed. How do we close a cost gap? Alternative raw materials, alternative labor, try to reduce the overheads, etc. C, calculate the cost of the 128th chair made and state whether the target cost is being achieved on the 128th chair. That is 6 marks. In total, they even tell you, that is a good thing with ACCA. They even give you the number of minutes which you're supposed to, maximum number of minutes, which you're supposed to work a question within. So like now here, it's supposed to be 27 minutes. But of course, if you're a bright student, this is a question like myself, I can't take more than 10 minutes. So I would want to throw the ball to you in some way within 5 minutes, 5 to 7 minutes. What would have you done if you got this kind of a question in an exam? Pata potea. Okay. Great. So already ameenda kulala mapema eh? Now, ladies and gentlemen, this is a very simple question. Very simple question. It's a question that will not take more than 5 minutes to do it. Very simple question. Simplest of them all. Now, the only technical thing that I'm supposed to handle here is labor. The moment I handle labor cost, then I will be at home. The moment I handle labor cost, I will be at home. Labor cost is the only one that is normally affected with what here learning curves. So we start with the first working, which is labor. So labor cost. Labor cost using learning curves. LC in this case is not life cycle, but learning curves. So ladies and gentlemen, I know how the learning curve looks like. We know in learning curves, y should be equal to ax raised to power b plus 1, remember. Y should be equal to ax raised to power b plus who? B plus 1. B plus 1. Now, ladies and gentlemen, remember that A is the time taken, or A is the labor cost. The labor cost of the first unit. The labor cost of the first unit. The labor cost of the first unit. Like in this question, honestly, they have told us something to do with the first unit. They have told us something to do with the first unit. What have they told us? What have they told us? They've told us that the labor, they have told us here for the first unit, they've told us BCC estimates that the first chair will take 2 hours to prepare. So 2 hours to prepare. So labor hours, 2 hours. Then have they given us the labor rate, the rate of paying these workers? Yeah, learning, etc. We can go up a little bit and try to get the labor. It's here. The cost of labor is $15 per hour. So it's $15 per hour. So $15 per hour. So could you kindly take 2 times 15? That will give us 30. So take A to be the labor cost of the first unit. Brilliant. From there, ladies and gentlemen, I know next thing will be about B. B is what we call the learning index. The learning index, to get the learning index, we normally take log R divided by log 2. We normally take log R divided by log 2. Log of the learning rate divided by log 2. So log R divided by log 2. R is the learning rate. So has this examiner given me the learning rate? Oh, yes. He has given me the learning rate here. He's told me it's 95%. So I'll talk over log of 0.95, log of 0.95. So we have here log of 0.95 all over log 2. So could you kindly give me an answer here? Log of 0.95 all over log 2. Tell me, what do we have? Log of 0.95 divided by log 2. What do we have, somebody? Log of 0.95 divided by log 2. Of course, for ACCA, they have given us that answer, but CPA, you and I know that CPA can't give you values. You have to get the B yourself. So you go to your calculator, as I told you, be engaged. You talk of log 0.9 divided by log 2. Teresa George is giving me a figure of 0.074. So negative 0.074. Is there anyone else who is able to see that figure? Yes, Lucy Naisenya has given me that figure. Anyone else? Please ensure that you are engaged. I'm so sure even Aurelia, the one who has told us bye-bye, I want to go and sleep, It's because at some point you could realize she started off very well. Towards the tail end here, perhaps she stopped participating. You have to participate throughout. You must participate throughout. However small, even if it's 2 times 2, whenever I ask for answers, simply give us the answer and you can never go wrong. Thank you and thank you very much. Ladies and gentlemen, the moment you give me B, I know as per the exponent wants us to give them B plus 1. So then this will be minus 0.074 plus 1, which will end up giving us what figure? Minus 0.074 plus 1. This one will give me which figure? This one will give me which figure? Minus 0.074 plus 1. What figure do we have here, somebody? 0.926. Thank you very much, Lucy. Now, after you get these 2 parameters, ladies and gentlemen, the only thing that now you need to do is to come and plug in the figures up there. Go and plug in the figures up there. When you plug in the figures up here, what do we have? We have our Y, which is the total labor cost. Remember, Y is the total labor cost. Thank you very much, Daniel. Y is the total labor cost, which will be 30x raised to 0.926. Yes, thank you, coach, also for giving me the answer. Remember, just like the way I do it every semester, I should be able to guarantee you a pass. But I can only guarantee you a pass if I see yourself deeply involved in my subject matter, both in class and outside, both in class and outside. Great. Now, please read the question. What do they want us to do in part 1? Let's read the question. So this question, part 1, they want us to calculate the average cost for the first 128 shares. So give me the labor cost of the first 128 shares. So come and give me Y, first 128. So this will be 30. 128 is the quantity raised to 0.926. So please give me this answer. So we say 30 times 128 raised to that parameter. Don't fear getting it wrong. Getting it wrong is part of the game, will be part of your success. Well, so long as unaongea, hata kama unaongea uongo, utapita. So unasema 30 times 128 raised to this particular figure. Kindly give us the answer. 30 times 128 raised to 0.926. What answer are we able to get here? What answer are we able to get here? I can see great students. Yeah. Okocha gives me 2681.6, 2682. Great. So 2681. 2681. It's always good to round off like 2 decimal places. It's important for accuracy. For accuracy, it's important. But now, ladies and gentlemen, remember that these people want us to provide an average cost. These people want us to provide an average cost. So come and give us the average labor cost, average labor cost, average labor cost will be equal to 2681.62. Divide this by 128. Divide this by 128. Divided by 128. So could you kindly give me an answer? That's average labor cost. So Okocha gives me 20.95. Thank you very much. 20.95. 20.95. Thank you very much, Lucy. 20.95. That is great. Now, after that, I'll be able to write for my examiner the cost statement. So mention their cost statement. Mention their cost statement. Cost statement for this comfy upholstery chair cheese manufacturing company. So cost statement. So cost statement. So for the cost statement, ladies and gentlemen, what do we have here? For the cost statement, what we have here, number one, is the labor cost. I'll start with it so I don't forget it. The labor cost for each share is 20.95. That is the labor cost for each share. The labor cost for each share. How about materials? Materials, what have they told us? That we need, there is something we need. For materials, there is something we need. So for materials, they've carried out an investigation in the market and using a target costing system, have targeted a competitive selling price of that. I don't want that. There is frame and massage mechanism will be bought in for 51. So we have a frame. Of course, each share will take one frame. So that is 51. That is 51. And then we continue. We are told leather costs 10 per meter and the 2 meters are needed for a complete share, although there is wastage of 20%. Whenever there is wastage, so many students will not be able to handle this wastage very well. So many students will not be able to handle the wastage very well. So we have leather. I can see 2 meters are needed. 2 meters are needed. But remember these 2 meters, the 2 meters are net. So I have to gross up. So how do I gross up? By dividing these with the net percentage. Net percentage net of what here? Waste. So 100% minus 20%. So 2 meters divided by 80%. Never ever take these, you multiply with 120%. No, you can't be right. Whenever there is a wastage, you have to buy more. And to know the more extra quantities to buy, you take the net divided by the net percentage. Can somebody give me this figure? 2 divided by 0.8 is what? 2 divided by 0.8 is what? I show you something. 2 divided by 0.8, I show you something. Somebody give me 2 divided by 0.8. Thank you very much. So this one gives us 2 points. So when it comes to buying, I will buy 2.5 meters. So don't write this. I'll buy 2.5 meters. And then the waste will be 20%. What is 20% of 2.5? 20% of 2.5, I want to believe is 0.5. 20% of 2.5. Just try that. 20% of 2.5 will be 0.5. So if you come and deduct these, ladies and gentlemen, this is buy, you buy 2.5, and then the waste becomes 0.5 exactly, then you'll be able to get the net of 2. Net of 2. You'll be able to get the net of 2. But if you try the other way around, if you take this times 120%, if you take 2 meters times 120%, you'll end up getting a quantity which is false, which is fake, that by 2.4 meters, then you'll be able to get leather ambayo itakuwa ndogo for your leather seat. So whenever there is a loss in management accounting, whenever there is a loss, to gross up, you take the net needed divided by the net percentage. So you should be able to just understand it in your own way, which you should be able to use in the future here. So I'm repeating this once again, ladies and gentlemen. Ladies and gentlemen, what we are saying here is that whenever there is a loss, take the net number of meters needed, divide by net percentage. And I've given you a very good example here, just an example. That if, for example, we have these 2 meters, of course, over 0.8, which tells us that we should buy 2.5 meters. Once we buy the 2.5 meters, we will have to waste 20%. 20% of 2.5 gives us 0.5. So when you subtract the waste here, then you'll be able to get the net meters which have to be bought, which are 2 like that. So ladies and gentlemen, listen to me very well. This is the gross meters that I need. Unfortunately, I know that each meter goes for $10. From the question, we know that each meter goes for $10. Each meter goes for $10. Each meter goes for $10. So if you try multiplying here, what will you get as your leather cost? What is our leather cost? Somebody help us out here. What is our leather cost? Somebody help us out here. What is our leather cost? 25. 25. And I believe that really these are all the costs. I don't think there is any other cost like overhead. And to believe that these are all the costs. And to believe that these are all the costs. Yeah, that's all. So please come and give us the total cost. 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 The total cost, what are you able to see there? So be the first to give us the answer. 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 96.95, and that is it. And ladies and gentlemen, this book is so great. We have answers being given down here. What you need to do is to scroll in your computer. You scroll in your computer. You go to question number 66. You go to question number 66. You scroll, 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 scroll. Go to question number 66. Because you guys are younger than me, I'm so sure scrolling can never be a problem to you. So like you can see what they have done here, the answer they have is 96 point what here? 95. And the most important thing is how they handled the loss. The loss here, this 25, how they got it like that. So in our next class, ladies and gentlemen, that is where we shall be able to start from. In our next class, we should be able to continue from there. And of course, I will be able to give you a plan that you shall be using to revise, So it has been a pleasure, ladies and gentlemen, hosting you tonight. Remember, we are supposed to be having very many students, right? Right? So, and who are my ambassadors? It is you. Get out of your way, advocate for us to get, like for AFM, 80-90 students, 80-90 students. Otherwise, the number is small. Motivate mwalimu. Thank you very much. Good night. I hope you have enjoyed the lesson.